Live from Bloomberg's world headquarters in New York, I'm Shanali Basak.
And I'm Tim Stenivek. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
And the halving has come and gone, but not without some drama as Bitcoin fees have soared. We're going to discuss what is next for the top crypto asset.
Plus, Stablecoin gets a fresh push in Congress. Kristin Smith, CEO of the Blockchain Association, joins us to talk about the importance of the legislation.
And a group of FTX investors and customers agree to drop their claims against co-founder Sam Bankman-Fried. We're going to tell you why.
That's all ahead over the next half hour. But first, here's a snapshot of the market. As Shanali just mentioned, the halving has come and gone, and Bitcoin's price in response was, well, muted to say the least. The halving happened just after 8 p.m. Friday, Wall Street time, and the price didn't move that much immediately after that. Though we have seen a general risk-on mood hit assets over the last couple of days, we've seen the price of Bitcoin move up since the halving by about 3.7%. Similar moves for Ether since then. Ether now higher by more than 1%. Now to crypto-linked stocks just surging this week. Check this out. Coinbase rallying 7% yesterday and is higher today by 3.4%. The Bitcoin mining company Riot Platforms rallied 23% yesterday, higher today by 3.7%. And MicroStrategy also surging yesterday by 12% and also higher by 1.6%. Should note Riot Platforms down about 25% so far this year. Shanali?
Now, Tim, if you look at Bitcoin after the halving, you had a relatively muted price reaction after that halving event, but the average transaction cost on the network jumped. It actually soared really before coming back down, adding to the exuberance around the halving and providing miners with a windfall. Remember, there was a protocol also launched over the weekend on the network. The hash rate index, remember, this includes transaction fees and other information about the Bitcoin network. It surged as high as $182 above that level before tumbling back down closer to $80. All in all, miners earned over $109 million in revenue on halving day.
All right, well, let's continue to follow the money and talk flows here because appetite for global crypto funds continued to decline last week. Crypto outflows totaling $206 million in the week through April 19th. Within that, Bitcoin ETFs actually saw $192 million in outflows in the last week. As we have seen a risk-on mood hit markets, including crypto, this week. We'll see what it has in store, Shanali.
And also, Kraken's head of strategy, Thomas Perfumo, explained why the halving event was so important to the crypto community and for everyday investors.
When the halving takes place, 94% of all Bitcoins that will ever exist will have been mined. And less than 1%, we'll see less than 1% inflation in the circulating supply of Bitcoin going forward. So that's a really powerful story.
Well, let's bring in Fabiano Consulting founder, Amanda Fabiano. She consults crypto mining businesses. Amanda, good to have you with us this afternoon. We spent a lot of time over the last couple of weeks talking to miners ahead of the halving. Now that it's come and gone, I'm wondering what their biggest concern is moving forward.
Hey, Tim, thanks for having me. I think the biggest concern moving forward is going to be what happens long-term with fees. So the security model of Bitcoin relies on fees to increase, and as Sonali said earlier, we have seen that happen a lot over the weekends. The reason for the fee spike in Bitcoin has been because of the launch of runes. So should runes be successful and have sustainable adoption, it could vastly offset the loss of revenue for miners.
So what are you advising them to do in this post-2024 halving era?
I think operational excellence, SG&A costs are going to be extremely important, and also really taking a look under the hood at the Bitcoin development that is happening.
Speaking of development, if you think about runes, as you've been talking about for a moment here, can you explain exactly why that caused the fees to surge so drastically over the weekend and how you think about the volatility around these fees?
Sure. So runes is a new fungible token standard created by the creator of ordinals, and that allows people to inscribe arbitrary data on Bitcoin, like art. When runes was launched this weekend, a lot of people wanted to get a specific ticker. And so we saw this massive rise over the course of the weekend, right? Because everyone was really going towards, making this thing be successful. I think the bigger point we're going to see longer term is a wave of tokenization and DeFi activity on Bitcoin, which is expanding the narrative of what Bitcoin is. It's no longer just this store of value asset. It's becoming a platform and an ecosystem with a multitude of apps and other native assets that can be built on top of it.
How important?
Right now, there's a lot of random things being added to Bitcoin. And yeah, some of them are a little bit ridiculous in the moment, but I think the bigger thing is this opens the door for longer term optionality of tokenization on Bitcoin.
Well, that's what I was going to just ask you about, the longer term tokenization, going beyond runes. How important are runes in particular and its success, and how important is it for more things to be built on top of the network?
I think right now, a lot of infrastructure needs to be built around it. It's still very greenfield, but it's definitely an evolution I'm looking forward to watching. It's this idea that comes with it is this, like, what is a Bitcoiner? And that's a cultural shift that's happening. And so I do think that we'll see a lot more people take a look at runes and really just pay attention to what's happening there as, the community drives behind it and builds the infrastructure to support it in a way that, frankly, Bitcoin is supported now.
Amanda, I think in this space, a lot of people potentially watching saying, okay, well, I'm not quite sure what's going to stick and what's not going to stick. With something like runes, for example. What's the test that you have for whether something is a promising piece of technology, a promising built on the network, versus something that that we're not going to be talking about in a year?
Yeah, I think from a tech perspective, it's bringing something new, right? I think there's going to be a lot of different tokens that come and go on top of it. One of the tokens that I've been watching has been Pups, which is an earlier community on Bitcoin. Large base, large brands. They're taking their time to migrate from Bitcoin's older token standard, BRC20, to this new, more efficient token standard of runes. So just like doing some research, figuring out what companies are actually, or what communities are really building towards something new. But I think there will be a lot that don't make sense in a year from now. But, TBD if Rune stays or goes, but long term it is good for miners because it increases transaction fees, and miners should be focused on profitability.
If miners do benefit from transaction fees, there are other consumers, if you will, that are the flip side of that really don't benefit from this and are quite frustrated by it. Do you think that dents really the ability of the adoptability of Bitcoin?
Right now, it's this rush, right? Everyone wanted runes to work and wanted to figure out how it would work. I think some of that will subside. And so I think that we'll see like a reduction in the transaction fees that we saw over the weekend. But I think the usage of the network isn't a bad thing. Hopefully the fees will be something that will be usable for everyone to be able to do. I think Bitcoin being able to be used around the globe for monetary exchange is still very important.
Amanda, I want to just take a step back and think big picture when we're talking about what happened with the halving. We've spoken to a lot of folks over the last few weeks who've said and reminded us that after every halving, we've seen the price of Bitcoin move higher substantially. I'm wondering what happens if this time is different, if we don't necessarily see that. What happens to miners?
Well, that's where their operational piece really comes in handy, right? How much is their cost to mine? How much is their SG&A cost? Those are the two things that I'm keeping a really close eye on the miners that I'm following. I think those are the pieces that are going to really make a difference, because for miners, if you're not on the low end of that cost curve, you're not going to be able to survive long term. We probably will see a certain amount of miners turn off eventually if Bitcoin price doesn't increase because their cost is too high. So I think M&A activity will also increase over the next year, just because miners need to find partners to survive.
Yeah, I mean, Amanda, you have a great view on the space. Give us some names here. Where could we see M&A? Who could we see not make it?
I think you'll see some private miners try to merge with public miners. I think you'll see some public miners try to figure out how they can, have an edge against their competitors. The market is pretty saturated now with over 25 different companies on the NASDAQ. So hopefully there will be some synergies where someone has one piece of the mining puzzle that the other person doesn't have another piece. So for example, if you have, a really good facility but not capital, and you have a partner who can raise capital, that would be a great marriage. So I think we'll see some marriages over the next year, and then I think we'll also see some people get in really tight positions and have to figure out an alternative.
Right, marriage is a very pretty word. It could be a little bit of vulturing going on as well. Amanda, when you look across the industry, you talk to a lot of folks, you consult with a lot of clients in the mining industry. Are there people starting to feel any pains, given that even though we saw that initial surge in transaction fees, we're back down once again, and we do have the rewards now halved in Bitcoin?
Yep, I think people have been preparing for the pain a long time ahead than they were the last round. We have more institutional grade miners this time around than we did during the last halving. So The pain, I think, has been being prepared for a while. We saw a lot of miners pull down on ATMs. We saw a lot of miners scoop up assets, right? We saw a lot of miners put in machine purchase orders for better efficient machines. So I think those narratives and those strategies really help them position themselves now. And so now it's going to be who survives over the next 6 to 12 months with the strategies that they put into place.
Things are certainly shaking out. That is Fabiano Consulting founder, Amanda Fabiano. Now, coming up next, we're going to talk to Kristin Smith of the Blockchain Association. She's going to join us to discuss the newfound push for stablecoin regulation and why her blockchain association is suing the SEC for the first time.
And Sam Bankman-Fried settles with FTX investors, putting the blame on high-profile promoters of the brand.
And here's what Binance CEO Richard Tang had to say about expected Bitcoin volatility following the halving.
The crypto industry goes through cycle. It's to be expected. There's going to be market volatility. It doesn't only impact the asset front. I mean, given the geopolitical tension, given the interest rate environment that we are seeing, the inflationary environment, crypto industry is impacted like other asset classes. Right? So, but we are bullish long term.
I spend basically zero time thinking about crypto. I spend a lot of time thinking about tokenization. So I would put those two things in two wildly different buckets. To me, tokenization is simply an access tool. It is about using good blockchain technology to provide an easier access methodology for particularly retail investors wanting to access the private markets.
That was Hamilton Lane Advisors co-CEO Eric Hirsch speaking with us about his focus on tokenization. And speaking of tokenization, just last week, 2 senators are proposing a measure to regulate stablecoins. Cynthia Lummis, a Wyoming Republican, and Kirsten Gillibrand, a New York Democrat. Lummis saying now that passing this bipartisan solution is critical to maintaining U.S. dollars dominance and making sure certain U.S. certainties in the U.S. remain the world's leaders in financial innovation. We're going to discuss D.C. legislation and other legal issues in crypto with Blockchain Association CEO Kristin Smith. What are the stakes here? We've been waiting for the stablecoin legislation to kind of make it through Congress for a while now. When you look at what's kind of finally hitting the tape and the agreement you're starting to see form around it, how does it set the stage for stablecoins, particularly back to the U.S. dollar moving forward?
Yeah, well, stablecoins are one of those issues where you have a centralized issuer that is minting tokens and having dollars to back up those tokens. And so we think it's really important that we do get legislation done in this space. We've seen a couple of bills. Patrick McHenry passed one through the committee earlier this summer. Lummis and Gillibrand have brought some new ideas to the table, and we're in the process of providing some feedback to that legislation. But I do think it's important because I think both in the Trump administration and Biden administration, the president's working group has identified that this is a gap in the federal government's authority. So it's really the job of Congress to step in here. And we're encouraged that the discussions are ongoing. And hopefully, if we get something done that is workable, we will be able to have a framework that will allow the innovation to continue here in the United States.
How would you respond to skeptics out there, including Sherrod Brown, Elizabeth Warren, who say that consumer protections just aren't there with this?
Yeah, well, we would say they need to step in and enter some consumer protections. So, stablecoins is one of those where it doesn't really fit neatly within the existing banking framework we have today, right? These are assets that are supposed to be 100% reserved, not a sort of fractional reserve type system. So we need a unique and special framework. So yeah, I would say to them, yeah, they're right that there are pieces of the ecosystem that there are gaps, and we need them to thoughtfully think about how to step in and fill those gaps in a thoughtful and workable manner.
What about questions about the impact that this would have on the broader financial system here in the U.S.?
Yeah, well, I think, this should not have a systemic risk, right? Like, these are assets, again, that are 100% reserved. This is very different than with the banking system. But that being said, we want to know those reserves are there. We want to make sure those reserves are being made up of in a way that's responsible. And so, yeah, we do need Congress to step in and take action to move forward on stablecoins.
Why wouldn't the stablecoin industry be regulated more like money market funds?
Well, today they're regulated as money transmitters, right? And so there's a state framework where they get money transmitter licenses. They're also registered as money services businesses, with the Treasury Department. So there is a regulation today, but this regulation was not meant for this stablecoin, for this digital wrapper around a dollar. We really need kind of a fresh look at this, and so we're excited to see that Congress is taking an interest and are very eager to provide feedback on the new proposals that have been put
How
forward.
do you think about the playing field? It's interesting because there's a debate under the surface on who kind of wins out the gate if this were to kind of meet the tape as we've been talking about. Is it the likes of the existing stablecoin players, or does it create a path for more traditional financial services players, the JP Morgans and BlackRocks of the world, to be dominant in a stablecoin world?
Yeah, well, this is a spot where you have to have crypto expertise in order to make stablecoins. And so, Circle is one of the great companies here in the US that is doing that. And so I think, going forward, competition is good, right? Choice is good for consumers, and there might be a role for banks who want to step in to join this space. But I think we're also going to see a lot of more crypto native, sort of companies emerge. And so, yeah, I think competition is good, and the more players that want to be a part of it, the better.
Okay, well, I want to talk about the lawsuit that
Yes.
the Blockchain Association filed
Yes.
today against the SEC, essentially challenging the SEC's view of who and what is a dealer. What's the issue that you see?
Yeah, so the SEC finalized a new regulation called the dealer rule earlier this year. And the problem is the SEC went forward and basically tried to do a very expansive redefining of what it means to be a dealer. So this is problematic for traders who are trading on their own account that might get pulled into this regulation. But in the crypto world, it's particularly problematic for decentralized finance. In decentralized finance, we're trying to replace intermediaries with software code where there is no customer and client relationship. A person could just go simply interact and make a transaction on their own behalf. And so with the dealer rule, it is so vague, and the SEC made no attempt to answer the questions that the crypto industry had in the comment-making process, that we think that this violates the Administrative Procedure Act. The SEC has laws that they have to comply with as well, and I think the APA is one of them. And so we're hoping that the court will find that their action was arbitrary and capricious and will, sort of pull back that rule that the SEC pushed forward in a very unclear and vague manner.
Maybe paint a picture here of what happens if the SEC is able to succeed here with this rule.
Well, in some ways they have succeeded, right? They have finalized the rule, and I think the problem that we have right now is that market participants in the crypto space don't know how to comply, and in many cases can't even comply. And so we're seeing this when I talk to, we have nearly 100 companies within our association at the Blockchain Association. We're talking to members, they're holding off on hiring in the US right now, or they have new products that they want to launch on top of blockchains, and they're waiting to see what happens with the election, what happens with the SEC, because the uncertain environment is problematic for innovation. And so, our hope is that, our lawsuit, there's also another one out there that the Managed Funds Association has led on behalf of the hedge funds. We're hoping that these lawsuits will slow the SEC down from being able to move forward with enforcing this rule, and will force them to go back to the drawing board and reconsider some of the unique elements that crypto technology has in the trading space.
Very, very briefly, 20 seconds. Who's better for the crypto industry? Who's better for the Blockchain Association? President Biden or former President Donald Trump?
Oh boy, that's a good question. I would say RFK Jr. is probably my best answer. But I think right now we've seen Trump become more neutral than he was in the last administration. Biden has been really challenging, largely because of the people that he's appointed in his administration. So, we hope we get a fresh shot either way next time. But yeah, certainly going to be an important election for the crypto industry.
All right, gonna have to leave it there. Blockchain Association CEO Kristin Smith, thanks so much. Well, coming up, the details of Sam Bankman-Fried's new settlement with FTX investors. And to access all of the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
Now the latest in the FTX saga, because it's still going if you could believe it. Investors now have agreed to drop claims against Sam Bankman-Fried as part of a settlement that puts the blame on high-profile celebrities, sports stars, and social media influencers who promoted FTX to investors and customers. Bloomberg's Ava Benny Morrison reported on this. She joins us now. Why are they agreeing to drop this?
They've said that they think that Sam Bankman-Fried could be more valuable to their case than going after him with potentially protracted and uncertain litigation. As part of his agreement with FTX customers and investors, he's agreed to cooperate with them in their case against some of the other defendants who you've alluded to before, Larry David, Tom Brady, other social media influencers as well. So Sam Bankman-Fried has agreed to hand over any documents he has and help them in any way that he can.
Larry David and Tom Brady. Never thought I'd be talking about those two on the crypto show. Hey, I want to shift gears a little bit and talk about CZ, founder of Binance, because you're actually headed to Seattle next week for sentencing, Ava. Remind everybody what's at stake here and specifically what's at stake for CZ. What could happen?
He could potentially face up to 18 months in prison. So taking it back a couple of steps, last year he was charged with banking law violations. He pleaded guilty and he faces up to 18 months in prison. This was the culmination of a really lengthy DOJ investigation into Binance, whether it was accepting US customers on its non-US exchange, and whether it had proper protections and compliance to protect the exchange against sanctions violations as well. So, we're keeping a close eye on that, and I think everyone's eager to see what the result will be.
And we'll certainly be keeping a close eye on your reporting from Seattle over the next week. That's Bloomberg's Ava Benny Morrison joining us. And one more story that we wanted to share before we go, a legal pad that went viral back in 2017. You remember this. It's now selling for 6 figures online. The notepad with the words "Buy Bitcoin" scribbled on it is currently fetching bids of more than $146,000 in an auction. It was seen behind then Fed Chair Janet Yellen during congressional testimony almost 7 years ago. The bidding for the ink drawing is slated to end late on Wednesday.
And if you could believe it, of course, that the price that it is now looking to fetch is actually more than double the current price per Bitcoin.
How do we know that's the real sign? Yeah. That's what I want to know.
That's a good question.
It's a legal pad.
You would have to have, what do you call it? Somebody that looks
Maybe
against the way that you transcribe.
Maybe there should be like an NFT to authenticate its authenticity.
That's true. I bet you Ken Griffin will not be bidding necessarily for that one.
Although, all right, a couple Bitcoin right now, that's how much it's going to cost, right?
Yeah, exactly. Okay. Maybe just trade in your Bitcoin. Well, anyways, that does it for Bloomberg Crypto today. Join us again next week, same time, same place. This is Bloomberg.